If you thought the GTA housing market hit bottom, think again. 2026 is not bringing a crash or a boom, it's bringing a reset. Prices, rates and buyer confidence are shifting, and not in the way most people expect. In this video, we'll look at where the run to real estate it hit it in 2026, what the experts are forecasting, and what it means for you, whether you are buying, selling or investing. Let's jump in. Before we look ahead, let's anchor where we are right now. At the end of 2025, the GTA benchmark price hovered around $960,000, down about 5% year over year. Detached homes are finding their footing again. Condos still soft and listing higher than we've seen in years. So we are heading into 2026 with a more balanced market. Buyers finally have breathing room. Sellers, on the other hand, are realizing that strategy now matters more than luck. But what happened next depends on one huge factor: interest rates. For 2 years, rate hikes ruled everything. Now in 2026, the talk has flipped. It's about when and how much rates might fall. Most economists, including TD and RBC, expect the Bank of Canada to start modest cuts by mid-year. We're not talking about a free fall here. Think roughly 3/4 to 1% over 12 months. That means lower borrowing costs, easier qualification for buyers, and renewed confidence in the mid-price range. But here is the key. Rate cuts don't automatically send prices soaring. They simply bring buyers back. And that shift in activity is already showing up in early 2026 projections. Let's talk numbers. According to Canadian Real Estate Association and major bank forecasts, average GTA home prices could rise 2 to 4% in 2026, modest but meaningful after 2 years of decline. Detached homes may see gentle appreciation. Condos will likely stay flat, maybe slightly down until inventory clears. In short, the market is bottoming, not booming. Expect a quiet first quarter and stronger momentum by summer as confidence rebuilds. But prices alone don't tell the full story. Demand is shifting fast. The biggest change in 2026 is not price, it's who is buying. 3 groups are driving demand. First-time buyers re-entering as rates ease. Immigrant families targeting suburban detached homes. Investors shifting from pre-construction into resale properties. Outer GTA areas like Durham, Halton and Simcoe are expected to overperform the downtown core, mostly because they still offer relative affordability. Meanwhile, condo absorption rates downtown remain slow, meaning 2026 still rewards patient buyers with negotiation power. So what does all this mean for you? Let's get practical. What buyers, sellers and investors should do in 2026? For buyers, this is your window to prepare. Get pre-approved early, lock in a rate, and have your paperwork ready before cuts fully kick in. Because when confidence returns, so does competition. For sellers, if you're listing in 2026, presentation and pricing are everything. The days of wild bidding wars are mostly gone. Buyers are analytical now. Homes priced right from the start sell fastest. Professional photos and small upgrades can still make a big difference. For investors, skip the speculation and focus on cash flow and stability. Detached rentals and duplex conversions are performing better than high-fee condos. In short, 2026 is about positioning, not panic. So here is the takeaway. 2026 is the year the GTA market finally starts to breathe again. Not a boom, not a bust, a reset. Detached homes should edge up slightly. Condos will take longer to recover. And affordability, while still tough, is finally moving in the right direction. If you want a data-driven plan for your next home, reach out. I'd love to help. And hit subscribe because next week we'll cover the market power flip. Are buyers finally back in charge? You don't want to miss it. See you then.